Hello and welcome everybody to this fantastic new edition of Trading Made Simple. Today we'll be looking at a fantastic strategy that we can leverage to navigate the markets. I like to really keep a focus on simple strategies which do not involve a lot of decisions, because we all know how that turns out. Like if you have way too many things, analysis paralysis and all that, like just before you want to enter a trade, it's just impossible to enter it. So that is the focus of all the strategies that we will be doing on this channel. But yeah, for now, I want to take you a little bit deeper into the strategy that I discovered, and it is quite amazing. You can even scalp, you can use it for longer time frames depending on your risk appetite. It is perfect. So yeah, without further ado, let's dive right in. So here I have like the ETH chart, which is like ETH5. It's a random coin. It doesn't really matter. Like we could take any altcoin, but yeah, for now we're using this one. And it's on the 6 hour. Doesn't matter. But like let's start here. So first up, we want to put in Supertrend. Like this is quite a popular. It's quite a popular indicator, and you can be at there 10,000 of these, but just use the default one. It doesn't matter. The only thing you would want to change is on the inputs. Like we want the ATR length to be 12. That's all, so that is it. Rest is just the default one. So then we have like the buy and sell here. Like we have these signals, right? So as you can see already, it is quite amazing. The pretext of this one is that you want to enter when it gives you a buy. You place a stop below that point, like that you see here, and like you target, let's say 2:1, or like 3R 2R, like so 1:2 relative to your stop. So for example, you would say, okay, on this one was the buy, which is here, this candle. You want to wait for the next candle. So this is another caveat to this. You don't want to immediately get into it. Like whatever time frame you are, for example, it's a 6 hour time frame. If I had gotten this signal, then I would wait for the next one and then enter. So then if we were to enter at the open of this one, and like that's quite a wide stop, so this is obviously better suited for a smaller position because it's a quite higher time frame. So this is still a 2 hour trade. Like so if you risk 10, you make 20 euros, like, or $20, which whatever currency you're trading in. But anyway, so this is the pretext of this. And also on the inverse side, you have, yeah, you could take a short position when you have, let's say this is the short. Okay, on the next one you took it. Well, this one has a more favorable, but it doesn't matter. You don't know how much it's gonna, but you're looking for a 2 hour trade, and that is good enough. Like 2 hour trade, it always works out well. But we can go to a smaller time frame to really have better risk rewards as you do. So yeah, let's look at this one. Like so we have clear uptrend here, like clear downtrend. Yeah, so let's look at this one, right? Let's look at on the 1 hour. So it's pretty clear that there are plenty of signals which have worked out very well. So the indicator works perfectly, but there's also times when it sells and instantly it chops us about. Like it's a buy, it's a sell, it's a buy. So we want something to eliminate that noise, for the purposes of which we will be using a DEMA. It's a double EMA, and a double EMA is basically like, yeah, EMA into 2, and like there's a formula, but basically it is a less lagging indicator than the EMA. So it just helps us to enter quicker. And and this is a momentum trading strategy, so we do want to enter a little bit earlier, and that is the reason why we will be using this one. I mean, I can demonstrate. So if I were to use EMA 50, you can see that even though the length is the same, it's it's the distance is, yeah, but when this crosses and when this crosses, there's a huge difference, right? So we will, yeah, we won't go too deep into that. So that's it, that will do. And what we want to pay attention here is that we will not enter a long position unless the price is above. So in this case, for example, you had a classic flip of the EMA, and then you had a buy signal. This is a perfect buy. On the flip side, here was a short signal, but your price was above the trend line. Like so we would not enter the short position unless it broke below, maybe retested it, and then we would enter. But like, yeah, we wouldn't enter counter to the trend. Like so basically this is acts like a filter and gives us some super cool entries and confirmation trades, right? So let's look at some examples here. Like, you saw here, okay, you had a sell here, price is above, but by this time when you get the signal, price is already way far down. So these kind of trades we would want to avoid, because there's already a 10% move. It will not go straight down, there will be a bit of a retrace. So these scenarios we want to avoid as a caveat to this strategy. Like, you don't want it to, like, for example, if you got a sell signal here, or maybe this printed the sell signal here, it's like too far gone, even though it has gone down further, like maybe it's gone down 15-16%. But if I got a sell signal, let's say here, and price has already gone down 10%, there's just no point entering it, because you never know, it might carry on further, or it might just spike back super quick, and you wouldn't even, you'd have time to react. So yeah, that is another thing that we want to take care of. And the third thing is that in this instance, like, it's better when you have such a situation, it is actually better to wait for the retest of the trend line. So in this situation, like, you had the retest, and then you have then it comes back in. Now this is maybe a better time to take a trade. And also, another confirmation I have here is this indicator. Like, so the thing that I was alluding to earlier, that I do not want to enter when there's already been a massive move to the downside, and then I'm trying to catch something. It usually doesn't end well, right? So I don't want to get involved there. So another caveat to this is, like, if there's a sell signal, right, price is below, but the RSI is super oversold, like, you also want to avoid that trade. As you can see, it's really not built up. So then again, you want to wait for a little bit of a retest and rejection of the trend line. Like, so we see here, there is again a rejection of the trend line, and then we go back in. But if you were to enter here, it takes a while. It could have spiked higher, could have done anything. So you don't quite know what is going to happen. Maybe in this one it is favorable, it doesn't really matter. But you will see that maybe on a little low liquidity coins, a lot of time there will be some hunts that you would not be able to survive if you were using proper risk management, right? So, which is what we want to do at all times, because it only takes one bad trade, and we've all been there. At least I've been there plenty of times. So yeah, so with that said, like, we want to make sure that we are not entering a buy position, like, when it's like, when it's really in the highs. So right now, if either we enter here, like, we had our confirmation signal here, and we had a bullish divergence. So this is a huge signal. This one is a huge signal, like this one right here, because it's just above. There's a, like, if you know candlestick patterns, this is like a hammer candle, and then you have a beta candle breaks above, and then you have a divergence here. Like, this is a no-brainer. This is like a solid setup, like, very, very nice setup. Oh, sorry about that. So yeah, very solid setup here, and yeah, probably did a 15% move. So I think, yeah, that's amazing. But as you can see, this is also effective on the 15-minute time frames. So here you have the sell signal, like, and look at that. Like, we could have entered here, right? You have the sell signal here, you could have entered here, but you wait till it interacts with the 50 EMA, and then you watch it roll. It gives you, and then by the time you are here, you're able to have a tighter invalidation, which is like this one, right? So you have your sell, and what we are targeting 1 to 2. If you're on the smaller time frame, maybe you could do 3, but ideally, I think with this strategy, we want to try with 1 to 2, because we want to get a feel for the asset. This is actually more reliant on the market conditions and the asset. So right now, it's a little bit of a choppy market. BTC, is hovering on the all-time high, so it's chopping about traders. So it's a bit of a choppy territory. So as it is right now, so I'm targeting like 1:2. But see, now in this situation, I had a sell signal, and it is just piercing the oversold line, 20, the 30 here, right? So if I were to enter here on the second candle, it's already gone down. So now it's picking up, but I have a rejection here, right? Now I'm able to have a better risk reward, if I were to play this trade, which is, yeah, which is like this, and then I take it to the downside, I have to see what targets there are here. But yeah, there's a clear target here, right? Like we have a target to these lows, possibly, like, you know, to run these lows, and that's a very I mean, I wouldn't take that trade because it's, yeah, if I were to target this one, then probably, but yeah, I guess the better trade was this one. The better trade was this one, which is a different kind of trade. We'll go into that later because you can see some exhaustion here. But yeah, I digress. Let's not get into that, but maybe for another video. But like we have a tighter invalidation here, and you know, we can build a position slowly. Like a lot of times, like with this kind of price action, you want to start small. Like, you know, I can't emphasize this enough. This is a huge tip that I'm giving you. Start smaller than what you think you want to trade with, like, you know, and you see the difference, like, you know, in your execution. But anyway, I do not want to make it too long, but this is basically the essence of the strategy that I was speaking about. And you can see this works like a treat everywhere. Like, you know, so here you have the buy signal, right? Here you have the, but anyway, this works amazingly well in a lot of assets. Like, but anyway, with that said, this works. Anyway, with that said, you know, don't want to take too long, but this works on a lot of assets, like, you know, on all of the assets, on all time frames. Like, you know, maybe with a few tweaks we will have to check, but yeah, we can see here, okay, you have a sell signal here on Doge on this candle. But again, I was saying, like, you don't want to enter on the next candle when the first candle is already a 10% down, 13% down candle. You don't want to enter there, and that is just common sense, even though it is below. And in this case, you want to wait. There's the patience is what is you know, going to get you there. So if we were here, right, this is the buy signal, but as you can see, the RSI has already just pierced that 70 line. Now I want to avoid this trade, then I'm waiting for the retest, and then I will go in again. See, like, because this is a little secret that I'm telling you. Like, it will not work 100% of the times, but you can see only in the few examples that we saw that this is actually quite a cool trick. Like, you know, if it is already extended, if the RSI is really at the highs, then, you know, with this 3 indicators, you can really play this to perfection. And yeah, I don't want to, like, you know, take any more time, but like that's the strategy, and have fun with it. Check it out, like, see how you can play with it, and I can give you 10,000 examples, like just on the Doge chart here on the 5-minute. This is the perfect setup. This is the bread and butter setup for this one. Like, you know, and in this case, if you had the sell, okay, you already, this is piercing the, you know, this is piercing, but it came back up. It came back up, and, you know, bang, it went down. But anyway, because you enter on the retest rejection of the trend line, and then you have a move. So, you know, it works on all time frames, and you just have to be patient, and you have to make sure that you do not project what the price is. You see and react to what the price is, and over time you will develop a great feel for it. But that's it for this video, folks, and hope you have a great one. Cheers, bye.